All right, I'm going to unmute here, see if we got set up properly, see if we are set up properly. Good morning. Might be the afternoon. Good afternoon if that's the case. Let's do a sound check here. Move my chat box over to this side so I could see a little bit better. You should be able to see a NinjaTrader daily trading and education website and some a quote board and a trading ladder behind that. Let's make sure I got let's get a thumbs up if I'm set up properly from somebody. Looks like we're good to go on YouTube. Pete, I don't even know what to say. I'm going to put this, I don't even, Pete, this can't be the same. This can't be Peter Klingensmith, is it? Oh my goodness. It's a name from the past. Hurricane Bob, also awesome. Thanks for being here. Appreciate it. We're going to get started right on timer. Give me a minute. I'm going to mute myself for a second. All right, I'm back. Jiaku music, all cool for me. Sweet. Michael, thanks for being here. Appreciate the thumbs up, the feedback. We're going to get started in, I don't know, a minute. We'll start right on time, get everybody going properly. And spend as much time as we want today. How's everybody doing out there? Everybody doing okay? I see people kind of ticking in right now. Very awesome. I love the YouTube stream. The YouTube stream is a great invention. Type in a good morning into the other chat, into the Zoom chat. If you're in the Zoom chat and you hear me and see me okay, give me a thumbs up if you can. Greatly appreciate it. It is noon East Coast time, and this is, we're right here, Futures Trading 101. My name is Jim Cagnina with NinjaTrader. Thank you, everybody, for coming. Serge, good morning. Everybody else who is saying good morning, I appreciate you being here today. We're going to go ahead and jump right in. Before we do, though, I do want to remind everybody trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, although that could be an equation for opportunity. It's also an equation for risk, so be careful. Only fund your futures trading account with risk capital. Everybody's unique and different in this world with respect to risk capital. I understand that. But my personal definition, money I could afford to lose, doesn't change my lifestyle or lengthen my retirement horizon. All right, we're going to be, I'm going to be using the NinjaTrader software today to kind of go through the story and talk about futures trading, what it's all about. Logged in simulated live mode today. Feel free to go ahead and just type in questions as we go. I actually could see the Zoom question and answer box. I could see the YouTube question and answer box, and beyond that, I can't see. I can't see anything. Let's go ahead and officially get started here. Again, my name is Jim Cagnina with NinjaTrader. So, you know, Future Trading 101. We're going to start from the beginning and work right into it. You know, the whole. This whole business of trading has been around for forever, pretty much, right? We had Greeks and Phoenician merchants, you know, establishing trade routes and trading partners way back in arguably 1571. The Royal Exchange in London was formed, arguably the very first kind of organized exchange to trade securities and commodities. 1667, the Dojima Rice Exchange popped up. You might recognize the word doji from the Dojima Rice Exchange, and pretty much they were trading rice. The Chicago Board of Trade kicks in 1848, and it's considered like the commodities trading hub, right? So back then, futures trading was considered commodities trading as early as 1848. And I'm from Chicago. I have a lot of history there. Then not too long after that, the CME formed the butter and egg exchange. I think that whole CME exchange was codified then at the end of World War I. And again, commodities there as well. I personally started on the floor of the Chicago Board of Trade in the early 80s. And you could do your math and say, okay, this dude is old. that's okay. I am. But I've been around, and back then there was no electronic trading, right? Back then it was just simply pit traded, right? By the way, I don't have a PowerPoint. I'm not going to show a PowerPoint. I do have an Excel spreadsheet. I'll show you a little bit later on, but I won't bore everybody to death with that. But in any event, so back then, in the 80s, even before that, the pit trading was kind of it's archaic by today's standards, right? If you were a retail trader, and there wasn't a lot of retail traders back then, but you would call your broker, right? And your broker would call a telephone on a bank of telephones on the floor of the exchange. And then they would take your order over the phone and write it down on a piece of paper. Then they would give that piece of paper to a runner. The runner would run over to the pit, which was pretty close by. But keep in mind, there's hundreds of people all smashing into each other, and hand it to a broker on the outside, a clerk on the outside of the pit. The clerk would then hand the piece of paper over his shoulder to the broker at the top of the pit, and then that broker would read the order off and then trade and try to execute that order. And, there's a whole bunch of other folks in the pit. Some of them are brokers. Some of them were called locals, people that, leased or owned seats that wanted to kind of speculate. So all this trading happened within this group. I was in the U.S. Treasury bond market at the time. Then once a trade was executed, it would be written down on a card. And then the broker would tell the clerk that was standing behind him, and the clerk would run that back to the phone. The phone clerk then would call the broker, and your broker would then call you and say, okay, you were filled at this price. That whole process sometimes happened very quickly. Sometimes it took hours to get your fill back at your price. Sometimes you didn't know where the market was. So it was really a rough way to go for retail folks, and the institutions and the commercials and the big Merrill Lynch's of the world. They had an inside position there, and were able to participate a lot more effectively than everybody else. Well, so then what happened in 1992? The CME launched the Globex Electronic Exchange. Globex Electronic Exchange enabled people to actually place trades and match trades electronically from a computer terminal, from a Globex terminal, they were called. And those started to kind of become very popular. And so now we had side by side, like pit trading and electronic trading, and it made it a little more easier for retail traders to participate. And then what happened next was simply just kind of, in my mind, began the whole online trading revolution, at least with respect to the futures trading. The E-mini S&P was launched in 1997. Think of that, 24 years ago. The E-mini S&P Standard & Poor's 500 stock index futures was launched electronically, and it was E-mini. It was smaller than the pit traded contract. That's why it was called E-mini. And what it did was it expanded the amount of participants that are able to access futures trading more efficiently, right? Retail traders now had the ability to participate on a more fair basis, right? Because they're sending orders electronically, and they were matched on a first come, first served FIFO basis. They were smaller size contracts. And that kind of just started the whole thing in my mind. It hasn't looked back since. Fast forward to May 6, 2019, and the CME then launched the micro E-mini. right? The micro E-mini S&P 500, along with the other whole bunch of other micro size stock index futures contracts. And that pretty much made retail futures trading accessible to everyone. And that's a quote from one of my colleagues. Retail futures became accessible to everyone, May 6, 2019, because now we have the ability to trade a smaller size contract and more flexibility on how much capital we decide to invest in this endeavor. And we'll talk more about that in a minute. But just so what's happened we went from commodities trading to much more than that, to futures trading, which had all sorts of different asset classes. And here's just, I'm going to pull over here the website for the CME Group website, just as on their homepage, and you can see they have their asset classes broken down. Uh-oh. Connection lost. Am I still connected to everybody else? Let me know if I'm still connected, guys. I just had a connection lost button here. I want to make sure I didn't lose my internet. Key says yes. Awesome. All right, no worries. I'm just going to go ahead and disconnect and connect again, and we should be back in business. Sorry about that. Hopefully, in any event, not important. Let's just keep focusing on the asset classes here. So agriculture, again, those are like commodities, kind of, this is a typical commodity type of trading, right? And energies, equity index, FX, Forex, interest rates, metals, and then there's some other stuff that they do here that's kind of beyond the retail scope. But here's the notional volume of what's traded here. So this went from being kind of an obscure specialty market to a global, just about any asset, liquid marketplace, electronic efficient marketplace. And it's truly amazing. It's truly a fantastic place to go ahead and participate to whatever kind of trading that you want. Again, that's my opinion, but I think it's true. All right. Anyway, so let's kind of walk you through the platform a little bit to give you an idea of what makes futures trading unique, what kind of, at least in my opinion, advantages that you could have with this particular market. Let's start with the trading ladder. I'm going to move it to the middle of the screen here. This is the NinjaTrader Superdome. And this is really where the rubber meets the road for futures trading. This is the unique part of futures trading, right? You won't get a trading ladder like this in, I don't know, over-the-counter spot Forex or cryptos or some of the other types. Even with a regular brokerage account, you don't get one, right? You have to have a $25,000 pattern day trade account, to maybe get one. And then even when you do get one, you're going to see a specific ECN. You're not going to see the entire field. Here, this is the S&P 500. This is one of the more popular markets. And there's only one of them, right? The E-mini S&P, there's only one, and it's traded at the CME Group's Globex exchange through various online trading platforms. And this is the NinjaTrader one. And so what does that mean? It means that the trader in Tokyo sees the same prices that we're seeing, sees the same, the trader in Washington State sees the same prices as does, the trader in Brazil or Italy or wherever you're at. You're going to see this pricing, and you're going to see these numbers in the middle on the price ladder. You're going to see the bids on the left. You're going to see the offers on the right, and so it's transparent. Everybody has the same information. There's no interference. There's no middleman. There's no distribution to one entity or the other. This is really what makes us unique. It's one marketplace, globally recognized, and this is a benchmark stock index futures. You turn on the TV in the morning, and this is what you see, what the futures did overnight. Now, what is a trading ladder? Real quickly, I won't go into too much detail on it, but it just shows the prices, right? The incremental pricing of this market, and the yellow number in the middle that's moving around, that's the last traded price, right? And someone says, well, where's the market? And you say, 16 and a quarter or 16 and a half, and it's moving around. We're in lunchtime now, so things are a little slower, and it ticks up by the smallest increment possible in this market, which is called one tick or a quarter point. Each quarter point's worth $12.50. It ticks up or ticks down, and hence the word ladder, right? It ladders up by a tick all the way up, and then you could scroll up or scroll down with your mouse pretty easily. On the left-hand side, or on the buy side, the bid column, which is the buy side, you're going to see a whole bunch of numbers here. And I'm going to freeze the ladder. Those numbers all represent limit orders or contracts that have been, orders that have been sent by traders. Could be a retail trader, could be an institutional trader, could be a commercial trader that have been sent to the CME and are resting at the CME Group's order book, waiting to get filled if the market gets to their price, right? And so you'll see on the bid side a whole bunch of numbers. These are literally contracts, limit order contracts at the CME Group. On the right-hand side is the offer or the sell column, right? These are contracts that have been sent by traders to sell an E-mini S&P at various prices on the price ladder. And if the market gets to that price, you have a chance of getting filled at that price and getting your order filled. And so this look here, this is called a NASDAQ level 2 look, right? You're going to see the entire book 10 ticks deep from the last traded price. And again, unique. It's very hard to get this kind of look, and it's almost impossible to get it. Short of being again a pattern day trader with $25,000 of capital that you have to invest, and a certain other obligations they have to meet. You don't have to meet any of that here. Now let's just take one more look here at the ladder. I'm going to freeze it again, and you can see. Here's another really a really great example of a liquid market where the bid and the ask is as small as possible. So the bid ask spread is simply the highest price on the buy side and the lowest price on the offer side. And the difference between the two prices is the bid ask spread, and in this case it's one tick. That's a liquid market. When you see these markets so tight, that's a good thing, right? That means that your transaction costs, your ability to get in is going to be less. The bid-ask spread is part of your cost, and your ability to get out your cost to get out. I'm sorry, is going to be reduced. So that's a really good sign in this particular market. And this is one of the mainstays. This isn't the most liquid market in the futures world, but this is one of the most liquid and certainly one of the most popular with retail traders. Now we mentioned before the micro futures contract, exact same market based on the exact same index, except it's traded in 1/10 the size of the classic E-mini. And in the E-mini, we talked about why it's called E-mini because it was smaller than the pit trader contract, but make no mistake, this isn't a small market. This is a big market. And the micro is 1/10 the size. So just wanted to kind of point that out. So that's the trading ladder. And it's easy to, and we'll play some trades on here just to show you how the mechanics work and how easy it is to get trades on and off. But again, I'm in sim mode right now. And again, feel free to ask questions as you go. At any time. Let's take a look at the market analyzer next. This is this rectangle here, and if you haven't noticed already, NinjaTrader is modular, right? So we can create as many windows as we want, as many charts as we want. We could customize, how big they are, where you put them. You could move them around. And so this is just how I have my workstation set up, right? This is how I have my workspace set up. And by looking at it, let's take a look at the market. This is really a quote board, right? I'm going to call it a quote board. It's a market analyzer. It does more than just being a quote board. But the way I have mine set up is I have the markets broken up by asset classes. And the very first one is the stock index futures, right? So we have the E-mini S&P, which we've been talking about, right? And I have the symbol up here. I have the last traded price. I have the daily volume, 836,000 contracts, and the net change. We're up 60 points today. And the NASDAQ is next. This is the E-mini NASDAQ. Last price, daily volume, 326,000, and then we're up to 12. RTY, so by the way, so S&P's large cap, right? Large cap US stocks. NASDAQ, quote unquote, tech stocks, 100 of them. So it's a smaller index. So some components of that index could weigh more heavily than others. And it's, again, widely followed in the world. And it's really non-financials is what this index is. The RTY is the Russell 2000. That's just the symbol for the Russell 2000, which is small cap stocks, right? It's the smallest 2000 of the Russell 3000. I know that sounds weird, but that's what it is. And again, we're up 44 today. YM is the Dow Jones, Dow Jones Industrial Average. This is the futures version of it. And we're up 508. And so you could see on the US side, we've had an extraordinary day today. There's been a lot of activity, and all the stuff going on in Washington is kind of settling itself out a little. It looks like, and it caused a lot of trade lift here, a lot of trade opportunities, a lot of trade risk. You got to be careful both sides. FDAX. This I added it here as another example of a stock index futures. This is the Eurex exchange. It's a German stock index futures. It's very popular. There's a couple other ones. There's a E-mini FDAX. There's the Euro Stock 50. Those are European stocks. So maybe you're in Europe and you want to trade those indexes, or maybe you want to trade at night, or maybe you could trade these during the day too. So FDAX is another one. Then I have the micros, right? The micros are the little brothers, right? They have an M in front of the symbol, and you can see the pricing is exactly the same. There's two different markets actually, but they're based on the exact same fundamentals, the exact same basics, right? So the prices are going to be in line, correlated nearly 100%, nearly 100% of the time. If it's off by a tick, then traders are going to make sure that gets back in sync. So and they're very liquid here. We have 500,000 in the MES. 656,000 in the micro Nasdaq. So you can see the micro Nasdaq actually has more volume than the classic E-mini Nasdaq, right? Very popular contract. So going down the list is currency forex, right? Currency futures, or forex futures, as some people like to refer to them. Tova, I'll get to that in one sec. Hang tight. And the currency futures, if you're trading spot forex, you understand a currency pair, right? And there's currency pairs on the future side as well. A lot of advantages trading currency pairs on a regulated exchange, right? Maybe you have a forex account with one of the over-the-counter dealers. There's a lot of over-the-counter dealers. As a matter of fact, you could probably place 4 identical trades in the euro US dollar cross as an example on 4 different over-the-counter brokers and get different prices. Well, here this is centralized. It's one place. This is the one place you could do a futures contract like in this method, in this manner. And again, everyone sees the same price who's trading a CME Group futures. There's not other buckets to go to and other places to deal with. There's no carryover interest overnight, is an example of another benefit of futures. It's a 23-hour marketplace. You don't have to wait for a 3 to 5 day settlement when you close positions. And trades are executed on a first come, first serve FIFO basis, right? So it's fair. It's a fair and transparent process that the CME has created. Then there's micros on the smaller size contracts for some of the entities. The energy complex, that's another really big one. We have crude oil is really popular, 382,000 contracts traded already. That's the light sweet crude, a WTI crude or light sweet crude, a grade of crude oil that's developed here in the United States. It's delivered in Cushing, Oklahoma, and it's a standardized commodity product, deliverable product. It's a benchmark, a global benchmark. There's other global benchmarks and energies. There's the Brent crude, Dubai crude, and those are sour. More, those are of more of a sour grade. The light sweet crude is coveted because it's easier to distill into petroleum, into gasoline. But in any event, it's a great market to look at. Natural gas, 158,000. And then metals, you have gold, silver, and there's even a micro gold. There's copper, there's platinum, there's some other metals as well, but I'm just showing quotes for those three metals products. And maybe you are a gold bug. Maybe you're interested in trading gold and silver. You know, you maybe you're tired of getting gold coins, you know, silver coins delivered to your house and hiding them in your closet. I mean, now you could participate in the metals market electronically on a very liquid basis. And then the interest rates, the whole yield curve, this is in the news a lot today. I got the ultra bonds. This is a true 30-year treasury bond, US treasury bond. I have the regular US treasury bonds here, which are legacy US treasury bonds, which I traded, which I was in the pit in the early 80s for that particular market. That the duration sometimes is a little less than 30 years. That's why it's not an ultra, but it's still a 30-year long-term debt. We have a 10-year note, a 10-year ultra note, and then a 10-year note. You know, you're going to see 10-year yields quoted all the time on the financial stations. You know, what are yields? You know, we're consistently over 1.5 on the 10-year yield side of things. And then you got a 5-year note, a 3-year note, a 2-year note, and a Fed funds. And so you have the whole yield curve that you could use to participate. You have the whole yield curve that participates. Whoops, I got a crypto here. Crypto, micro Bitcoins, for instance. We've done 13,000 so far today. You could express your opinion on that market. And then below that, and I messed up my category column here, I have the regular commodity stuff, the stuff we're used to: corn, you know, oats, soybean oil, soybean meal, soybeans, wheat. And these are the traditional commodity markets that have been around since, you know, I don't know, 18 whatever, and they're also available electronically in the futures market. So you have all these different asset classes, and you know, when I hear somebody say, "Oh, you're a commodity trader," it's like, well, no, this is way past just the idea of commodity trading, right? This is past that. This is really trading liquid futures markets that represent every single asset class. And hopefully I'm not beating a dead horse there, but that's one of the exciting things about being able to participate with trading through the CME Group. Okay. So let's talk about a little bit about capital efficiency, and it kind of turns into a discussion on margins, buying power, in that kind of thing. And in the futures trading, margins is a lot different than what it is in equity trading and stock trading, right? If you have a margin account in stock trading, and typically you're only going to get a 2-to-1 leverage. You're borrowing money to make that transaction, right, from your broker. You're borrowing money. In futures trading, the word it refers to buying power, right? So you're going to fund your account with a certain amount of money, and then once you place a trade and establish a position, part of the money that you use to fund your account with is going to be kind of set aside and used as margin, right? It's still in your account. You still see it. It's just kind of a mathematical calculation, and I'll show you an example in a couple seconds how that works. So keep in mind, you get an awful lot of margin. There's actually different levels of margins in futures trading, and it's a double-edged sword. It could work for you as well as against you, magnifies gains as well as losses. So be careful with that. But there's an overnight margin that's set by the exchange. And then there's a day trade margin that's set by the broker or the FCM. Let me just give you a quick example of that. Here's the Superdome. I'm going to go ahead and make sure I have an account checked. I do, SIM account 1. And I'm just going to click on the buy side, at the lower bottom, I'm going to click on the market button. Right. So I just want to actually buy a contract at the market. And you can see the Superdome is green. I have a 1 there. I just bought a contract. My P&L is going to move around here. You see this P&L here right now, it's at 0. It's going to move around here as the yellow price moves, right? As the price of the market moves, right? So I'm long from 41.16. I'm hoping the market goes higher, and I'm hoping it's not going to go lower. But what I want to show you at the top here is a couple of columns up here that are kind of interesting. So I have a cash value on my account. And again, this is a simulated sim count 1. And I'm using $500 of my intraday margin. right? I'm using $500 of my intraday margin. And then the next column says how much more margin I have available to trade. So if I wanted to do a second contract, clearly I have enough to do a second one because each contract only costs me $500. The initial margin, this column here, this is set by the exchange. And this is how much money you need to have in your account to hold your position overnight, right? To hold it overnight. And it's a 23-hour market. So the definition of overnight is kind of weird. It's only 1 hour. But this is the rule. There's no getting around it. So my excess initial margin here is minus $745, $44. So I don't have enough to carry this position overnight. But that's okay because most of us are going to be day trading. Most of us are going to be liquidating positions well before the end of the day, right? So that's the whole. This is really a day trading platform. It's very nimble, very easy to use, and in my opinion, very powerful. So that's an example of day trade margin and overnight margin. Now, a couple other columns to look at here on last three. Realized P&L. This would be my profit and or loss on trades that I've already closed for the day. Unrealized P&L. This is a this shows me what my actual existing trade P&L is right now. If I were to close my trade at the market, it's saying this is how much I'm going to be up or down, but it's unrealized. I haven't closed my trade yet. Total P&L is simply unrealized plus realized. Once I close a trade, let's go ahead and close it. I'm just going to sell one at the market right now. Okay, I just sold it, lost $37.50 on that. I don't have an open position anymore, and that's my total P&L. Now let me go ahead and let me do a market order again. Buy another one. Okay, so I just bought a contract, and once the price starts moving around, you're going to see the unrealized profit P&L move, and then you're going to add these two together to get the total P&L. Okay, so that's kind of how that works, and again, that's a view that you're really not going to get. And any other type of trading is clear and crisp as this. And so you know exactly where you're at all the time. Now, the other thing is interesting. I'm going to go ahead and close this position again. I'm just doing market orders just to demonstrate the numbers, right? So I close that position. Now there's no unrealized, only realized, total P&L there. Now, I don't have to wait, right? My excess day trade margin matches the amount I have in my account. I don't have to wait for anything. I don't have to wait for anything to settle. I'm good to go right away. And let's say I want to sell a contract at the market. I'll click on that market button and I sold a contract. So now in future trading, you could sell one, you could buy one. There's no uptick rule. You don't have to wait to get a worse fill because you have to wait for an uptick like you do in equity trading, right? So again, I could participate with the bid and offer just whenever I want and however I want. Another huge advantage why a lot of this rise of retail trading is really manifesting itself, at least in my opinion, here in these particular markets. Okay, let me see one more thing here. Bear with me. I want to show my spreadsheet. All right. Let's pull my spreadsheet over here. Now this is the E-mini S&P, right? Remember day trade margin right now. Again, I'm short. The initial day trade margin or intraday margin here is going to be the same whether I'm long or short. Doesn't matter. Let me just show you my trade. I did a couple trade examples to kind of make it easier to, if you're brand new to this, easier to understand this whole idea of how the math works and then the upside and the downside of margins in day trade margins. Now, I have 4 different trade examples. I have a winning trade example for Classic E-mini. I have a losing trade example for Classic E-mini. I have a winning trade example for micros, and I have a losing trade example for micros. All right, so we're all E-mini S&P. We're not doing any other market yet. All right, so let's take a look at the first one. E-mini S&P, there's a ticker symbol. If I were to go ahead and buy one contract at 41.20, sell it at 41.24, I would have made 4 points, right? 41.24 minus 41.20, I would have made 4 points. Each point's worth $50. per contract. I only did one contract, and my profit would be 200, right? 50 times 4. I would have used $500 in my day trade margin. I would have applied $500 in my day trade margin. And that's different from, let me make it clear. I'm not spending this money. This is just kind of it's just accounted for in my account already, right? $200. And then the notional value of this contract, and the way you calculate the notional value is how much S&P you control, right? How much market power you control. It's $50, that's the size of the point, times the contract's price. In this example, that notional value is $206,000, right? That's a lot of notional value for one contract. Now, let's say we did 2 contracts, right? We did 2 contracts. We bought 2 contracts at the same prices. We made 4 points, but since it's 2, it's double. Our profit would have been 400. We would have used $1,000 of our day trade margin, and the notional value would be doubled. And so the math is multiplicative. It's really, that's how you would do it. I have a 5 contract example here. Let's say I had a $3,000 futures account and I did 5 contracts. That'd be a lot of leverage in my opinion, and I probably wouldn't recommend it, but I'm just kind of wanted to show you the example. Again, made 4 points. Your profit would have been 1,000. You would have almost maxed out on your day trade margin, right? You would almost have used your entire account. So be careful with that. Notional value over $1 million. Losing trade, same numbers, exact same numbers. I lost 4 points instead of made 4 points, right? I bought it at 20, sold them at 16, -4, lost $200. Would have used 500 day trade. Notional value 206,000. Double it up, -400. If I had a 5 lot, I lost $1,000, right? And in my $3,000 account example, we would have blown through our day trade margin and then some. And so within a $3,000 example, this would result, I would have $2,000 left in my account on a gross basis if that happened. Let's go down to the micros. Here's where things start getting interesting. The micros are 1/10 the size, right? So everything's divided by 10, pretty much. I still would have made 4 points on the trade, 41.20 to 41.24, but my P&L would have been $20 instead of 200. My day trade marginal requirement would have only been 50, and then the notional value would have been 20,600. 2 contracts, everything's doubled. 5 contracts, everything's multiplied by 5. On the losing side, same thing. I would have lost $20. I would have lost $40 on 2 contracts. I would have lost $100 on 5 contracts. Now you could kind of start to see the relationship between the micros in the classics, because if you do 2, let's say you did 2 contracts in the micros, that's basically 20%, right? 20% or 1/5 of a classic. So now you could start expressing your opinion in a more refined manner, right? You could end up with 1.2 E-mini S&Ps as an example. Let me just, sorry, I didn't see these questions here. Okay, these are kind of like platform mechanics questions. I'll try to get those in a couple secs, a little bit later. Thank you for those though. In any event, so that's kind of, this is really how this thing works, right? How these markets work. So leverage, margins, notional value. Every contract has a notional value. We kind of looked at cumulative notional value on the CME Group website, where the the equity index notional value in September was almost $1 trillion, right? You add up all these different contracts that are traded, the volume of all these contracts that are traded, and then you're going to get numbers in that realm. Again, that just kind of shows this is a globally recognized, very liquid marketplace. Okay, so we talked about how the margins worked. We talked about liquid markets already. What we didn't talk about yet is like who trades these, right? So there's different entities that trade these things, right? There's retail traders, which it could be anybody, right? Me and you. There's institutional traders. And maybe an institutional trader is a money manager, professional money manager, or a fund, or some kind of entity that's licensed to go ahead and trade or speculate or position trade or hold positions for a longer period of time, or even for a shorter period of time entity, right? They're institutions. Then there's typically commercial entities, and commercial entities typically hedge something. The typical example of a commercial hedger, is the farmer, right? So the farmer, is not going to harvest his corn until later on in the year, but he wants to lock into a price now, so he can go ahead and participate in the futures market to lock in their price, and then later on, he could deliver his product at whatever the real market price is, and kind of minimize the exposure, his or her exposure to future price fluctuations. Another one might be maybe you own a facility that is going to you have to buy a bunch of silicon chips or computer chips from Japan in December. And you're going to have to do it, but you don't know what the yen US dollar cross is going to be. You don't know what the exchange rate is going to be then. So maybe you want to participate. You want to go ahead and enter into a futures position in the yen US dollar to hedge against the fluctuation of the price when it's time for you to actually buy your chips. So there's a whole bunch of different examples there, but there are a lot of bona fide hedgers out there in the world. And so the last group is the systems or the algo traders. They get a bad rap, right? So algo traders, system traders, they try to exploit, in milliseconds, little price discrepancies throughout all the various markets. They have computer systems running these things. But I would argue the opposite. I would argue that these entities, what they're doing is they're providing liquidity. They're adding contracts to the bid and offer side. They're keeping the bid-ask offer spread tight right now. Can you scalp in milliseconds as a retail trader and compete? Probably not. But you don't have to scalp in milliseconds to be successful. So those are kind of the four general categories of folks. And just to go double back to a question, so the stock index futures, think of the ES as the SPY, cash equivalent would be the SPY, NQ, QQQs, diamonds, iShares would be the Russell. So there are these ETFs that are created by companies, right? Not exchanges necessarily, but companies where you could participate also. But again, and not a transparent, in my opinion, not as transparent, not as liquid, and not as fair manner as we have here. Jason is saying, I'm not really sure if I understand the question, but so we're looking at the NinjaTrader trading platform. This is an online platform. You download it to a PC. It's a developer platform. It's award-winning platform. It's very powerful, yet easy to use. It might be a little bit complicated looking at it if you're brand new to futures, and I'll just kind of go over the setup really quickly. But it's not. It's straightforward. It's intuitive, and it's really kind of easy to use. So it's absolutely available online. One of the things to answer a couple other questions that popped in here, I do just kind of want to really quickly just show you on Tuesdays and Wednesdays at 10 o'clock, we actually do a live trade setup. We do technical analysis on the stock index futures and sometimes crude oil. And we come up with trade ideas, and we try to implement trade ideas in sim mode on the NinjaTrader platform, and that's that's an in-depth technical analysis type of hour on Tuesdays and Wednesdays, and we go into all the features on the platform. So feel free to join anytime. Those are free, and tell your friends, come as often as you want. Yeah, I wasn't sure what that question was referring to, but yeah, this is the NinjaTrader platform for sure. Anyway, all right, so I'm a little sidetracked here on my official bullet points, but that's okay. All right. So we talked about maybe the comparison between ETFs and regular equities. You don't have to have a pattern day trade account, no uptick rule. You don't have to wait for settlement, a more efficient use of your capital. You don't have to fund, especially with the micros. You could fund with a smaller amount of money. You just mind the leverage in the day trade margins. Be careful with it, but you have more of an opportunity to participate. Stock options is another area that I know a lot of folks are interested in. The stock options, they're a little bit more cumbersome and more difficult. I mean, usually when you see a bid-ask spread on a strike price in a stock option, you're seeing it come from one ECN or one broker, and it's usually wide. It's usually not one tick deep. And again, that's going to add to your execution costs. And it also means that the stock option isn't as liquid. There's not as much inventory at any given strike, and it might kind of prevent you. Also, a time decay. There's no time decay here, right? I could, this futures contract lasts for it's quarterly. So every 3 months, there's a new contract. So right now we're looking at the December. This is the E-mini S&P December 2021 contract. And the next one that's going to be the front month, the one we're going to want to trade, is March 2022, right? So we have some time before we have to roll over or think about that. And the NinjaTrader software pretty much does it automatically for you, so you don't have to worry about it. So there's really no time decay. Right, you don't have to worry. You're not up against the clock. If you want to express an opinion in the market and go long or short, and you do want to hold a position for a longer period of time, you can do that without that consequence. Because there's always the next contract month that you could just hold on to and just roll into. Very easy to do. And then platform confusion. I don't know about you guys, but whenever I try to make a stock option trade, it's about the trading platforms are about as complicated as possible, and I could never figure it out. And I'm going to show you some ways to trade here with this platform, just to kind of exemplify that. We talked about currency versus spot forex already. Cryptos, there is a micro Bitcoin contract here. You got to be careful. It's still a little bit in its infancy, and the bid-ask spread's kind of big, but it's one way to go. Cryptos in my mind are purely speculative instruments, hard to do technical analysis. It used to be the case where, there's only so many Bitcoins that could be mined in the world. And then there's a limit to how what the supply is going to be. But then somebody else comes up with another, crypto, Dogecoin or Ethereum or whatever they're called. So now technical analysis has to be done between 3 or 4 different coins. And it's hard to do. So in my mind, it's pretty much a speculative. I don't know if it's even an asset class. Some say it is, some say it isn't. Or if it's a security, some say it is, some say it isn't. I don't know that it's ready for mainstream trading or even fundamental analysis, for that matter, to kind of apply fundamental analysis principles to that. So again, I'm kind of back focused to, well, what's the best markets to look at? And again, in my opinion, this is it. Okay. So Wayne asks, is this service more about teaching people how futures work, or who one can use the NinjaTrader platform versus live trading? Which service, Wayne, are you talking about? So the whole the website I had up before, and let me just pull it up again, has a menu of a whole bunch of things on it, right? So we have the first two things you see are literally live trade setups, right? We look for live trade setups in a live market, in sim mode, and we do technical analysis. We talk about that technical analysis. We place some sample trades, and then we see how we do. That's Tuesday and Wednesday. These have been going on forever, for a long time. That's more of, hey, I don't care what platform you're using. This is these are trade ideas that, since this is our transparent futures markets, everyone's seeing the same thing I'm seeing here on the NinjaTrader software. Then we have some 101 stuff, some basic stuff. This is futures trading 101. This is basic. I expect a lot of folks come to this. They haven't traded before. They're new to futures. And they want to learn, or maybe they started trading futures. They want to learn more. And then top 5 indicators. This is technical analysis, how to. And then the other categories here are about the NinjaTrader software, right? Getting started with NinjaTrader. These are all events. They're all free. You can come to any of them you want. Order entry, trade management, charting, and additional training. So every event is a little different. Today's really just a discussion about, what are futures markets and why are they popular, and what could I expect if I wanted to get involved? So again, Wayne, I'm still not following you. I mean, we're doing these live YouTube streams all the time, and that's part of my job is to do them, and I'm happy to be here. Okay, so let's take a look at right now. Remember, we did that random short position, right? We sold a contract just kind of randomly, and on the chart, there's like a little, I don't know if you want to call it a cocktail stir or a label. It shows us where our position is from, right there, 15 and a quarter. And it also mimics it on the trading ladder itself on the right hand side. And we're short one, right? It's color coded. We're red, right? And we're up 3 handles, right? And each handle is worth $50. So, and it's moving around in real time as the market moves around. Now it's only 250, and you can see it down below here also on the trading ladder at the bottom of the numbers. Now, so we have a position on, right? We have a short position on, it's called. And to place a trade is really easy here. So if I wanted to place a profit target trade as an example, I'm going to move my mouse over to the trading ladder and pick a price. And I'm just going to do a random price. Don't follow live at home. I'm just going to go ahead and move it over to the buy side because I'd like to buy it lower. And so I'm going to send that. I'm going to click on the trading ladder and it sends it, and it's graphically represented here on my chart. Alternatively, the other thing that I want to consider doing is I want to put a stop loss in, right? I want to say, hey, I might be wrong. My opinion might be wrong. And, the prices might go up, and I want to limit my losses. So it's called a stop loss. And so what I'm going to do is I'm going to click on my mouse. I'm going to put it on there, and I'm going to go ahead and use my mouse, my roller key and my mouse to place the stop. It'll be a buy stop, and click. Now, so again, these are sent electronically from your trading platform to the server to the exchange. And then when it comes back here, you're going to get a fill, and it's graphically represented, saying not a fill, but confirmation that, hey, okay, you sent your stop, it's at the exchange. And that's kind of the process, kind of how it's exactly the process and how it works. And so, if the market does go against us, and then the market starts trading at 47.17, then this is going to, it'll generate a market order, right? Which will be a market order to sell a contract to get you out of your trade. That's the idea of a stop loss. Profit targets is the opposite, right? If it comes down to this price, I'm in line between 98 other contracts, and as the market trades at 44.11, I get closer and closer to the line, to the front of the line, and once it gets to me, then I get my contract. I buy a contract at 44.11. It can't go below me. It can't go to 44.10 3/4 without giving me my fill. I mean, in essence, I'm blocking the market from going any further. It's got to give me my fill to get lower, because the definition is at my price or better. Okay, and so that's how easy it is. If I want to change my price, let's say I want to move my stop, I'm just going to put my mouse on the order. I'm going to click once. I'm going to drag it down to a new price, and I'm going to click again. That's called a cancel and replace. It's really that easy and really that fast. You could, Nancy, you could also trade from the chart as well. And let me just kind of open it up here so you can see it a little bit better, right? Now, let's say I would like to change my order even on my chart. Let me make sure I have my chart trader on. Let's just go make sure it's on. I'm going to go look at it here. I have my account set up. It's all good. But I want to hide that right-hand panel. You don't have to hide it. I'm going to hide it because really I'm just going to grab my trade and move it down and click again. And you can see it moves down over here. So these two things are in sync, order entries in sync. And I could use either one or just one of them or just the other one of them. It just depends on what you want to do. So in any event, that's really kind of the basic fundamental anatomy of a basic trade, right? A position and a stop. And you can see in this case, I moved the stop below my entry place point because I was already making money on it as we were talking. Again, sim live mode right now. Does that help? Nancy, hopefully that helps. So if I want to make a new trade on the chart, I'm just going to simply move my crosshairs to wherever price I want. Let's say I wanted to sell a contract at 41.18. I'm going to right click and I'm going to hit sell limit 41.18. And it sends it. And then it's also going to be mimicked here on the ladder. Really, that's really the mechanics of actually placing and managing trades are pretty straightforward and pretty easy. Everything also is pretty much right click on something and you get a menu. If you wanted to add indicators that are unique to you, you have this list here. I have this list of available indicators here that I could add, and then I could configure them and put them on my chart. So it's really kind of a we were talking about stock option trading platforms. In my opinion, this type of trading platform is vastly better. Again, that's just my opinion. You want to duplicate the chart? Just put your mouse right up here. I'm going to right click and I'm going to hit duplicate. It's going to duplicate it. I'm going to have two. I'll move it side by side. So now I have two. Why would I want to do that? Well, I have a 10-minute chart here on the left, and maybe I want to make this one a 60-minute chart. Change it to 60 minutes. Now I have an E-mini S&P 60-minute chart. This is our candle charts. And I have a 10-minute chart. So now you're starting to get the idea of how it's configurable and how easy it is. And if you don't want to have extra windows open, then you have this little tab at the bottom here. You can click on that plus sign down at the very bottom of the chart. You see that plus sign? And you could add a different market. Let's add, I don't know, let's go to futures. And we'll go ahead and add a NASDAQ contract and hit OK. And so now we have the NASDAQ futures, E-mini NASDAQ, and then the E-mini S&P. I could toggle back and forth and build my technical analysis around whatever market I'm interested in. So that's why it's kind of easy. Wayne, we're not going to discuss ATMs today. There's automated trading strategies in which you can set up pretty much either a bracket trade like I just showed or something more customizable with trailing stops and stuff, kind of outside the scope of today's course. Plus, it's almost, our hour is almost up. But yeah, that's one of the tools here that's pretty powerful and easy to use. Okay. Nancy, hopefully I answered that question okay. Anything I missed, just type them in again real quickly here as we wrap it up. Anything I missed that you were interested in, anything that didn't make sense to you. But again, we have a marketplace here that's it's operated by a regulated exchange, highly regulated exchange, CME Group out of Chicago, and then there's a counterpart with the Eurex exchange in Frankfurt, Germany. If you want to do some of those markets, it's highly transparent. You can see all the trades, all the bids and offers as you go. It's highly transparent. It's fast and efficient. I mean, data in some of these trades are measured in milliseconds. Everybody sees the same pricing in the world. All the asset classes pretty much are represented. that most folks want to consider. Just think about a stock index future and how easy it is to express an opinion on the ES versus going in and trying to find going through a hot list of stocks and then managing those one at a time. It's a lot easier and more efficient to do it this way as well. Bernadette, my apologies. I realize I still don't have an answer to your question. Let me write this down again about the mouse, the middle mouse button. Apologies. Middle mouse. I'll find that out. So in any event, I think we're good. Any other last second questions here? Yeah, so the auto trade function, all right, really quickly, just let me kind of show you this really fast. And this is kind of beyond the scope of today, but I'm going to show it anyway. Let's just go and do a custom trade here. So I'll just do a simple bracket here. Quantity 1. Let's just pick a stop loss at call it 8. Profit target, again, random 8. And then I won't do a stop strategy at this point. Okay, and we're going to call this, you could name it if you want, save as a template. We'll just call it CAGS temp. Oops, temp. You don't have to name it, but I'm naming it. And hit OK. All right, so now at the bottom of my trading ladder, I have CAG temp signed off on. So now when I get filled, I'm going to try to see if we can get it filled real fast. Simulator is doing its thing. And it automatically sends my profit target. It automatically sends my stop loss, right? So it did that ahead of time. I didn't have to manually pick a price and do it. It did it manually. That's an ATM. That's an automated trade management, automated trade strategy. And then the second thing that's going to happen is when one of these gets filled, the other order will be canceled. It's called an OCO, order cancels other. Right. So that's just one technique of order entry. It's advanced order entry. If you're brand new to futures trading 101, you'll get familiar with the trading ladder and the dome, and you'll be able to do that. When we're going to talk about volume profile Tuesdays and Wednesdays, I'm not going to go over that today. He's referring to this. This is another unique aspect of futures trading, by the way, though. So you open the door for me a little bit to comment. But these volume histograms show throughout the course of the trading session how much volume, how many trade, basically the trading volume that's occurred at all the different prices. And that what this does, it gives us an advantage to say, hey, where is market happiness most of the time? What's the most popular price that's going to trade? Can we use that as a tool to identify possible areas of support and resistance and possible entries and exits? And, so to see volume, because it's one exchange, one market, it's all this data is pumped into the software, and you really can't. Have you seen that in your stock trading platform? Your Fidelity or E-Trade. Have you seen it on your Forex trade? No, you don't see those. You don't see this information. So this is more of kind of a transparent. We get all the information about volume and where buyers and sellers, where that fight for demand and supply is kind of settling out at. So it's a really great tool. But Tuesdays and Wednesdays, we go into huge detail on that, and at least how I use it. So Wayne, whatever broker you want to use, I would just kind of go to their website. Wayne says under the trade performance window, you could see the commissions. Yeah, you could do that for sure. Okay, I think we're good. Any last second questions? I want to really appreciate everybody coming. We're gonna do this again next week. So feel free to come back if you want, along with all the other events that we went ahead and posted today. Again, my name is Jim Cagnina with NinjaTrader. Thanks for coming. Have a great weekend, everybody. Be safe out there and be good to each other. Take care.